Hello guys, and welcome back to a new episode. This is RALLYTOP Investing 3.0. In this episode, I'm going to show to you how you can leverage on the market to have opportunities for multiple trade setups. This is not in any way encouraging you to overtrade. All right? Overtrading will be detrimental to your account. So you don't need to overtrade. In this business, less is always more. I'm making this video because a lot of you guys out there, a lot of traders out there had asked me to do a video that can help them see how they can take multiple trade entries in the market. All right? But please don't overtrade. Take a look at this. If we are going to be taking multiple trade entries in the market, then we are going to be using the internal structures. As you may have known, we have external and internal structures. In this video, I'm going to show you what is external structure and what is internal structure. So it is that internal structure that we want to capitalize on, all right, to see whether we can have multiple trade setups. Take a look at this diagram. This is a high and price printed this low. This low is only valid when it sponsors the move back up to take out this major structure high, and price has to close above it. And that happened here. And therefore, this low is confirmed. And here is a higher high. For your high or low to be confirmed, you need inducement. And here is the inducement taken out to confirm this high. And now, so you have this swing high and you have this swing low. This your swing high is external structure. This your swing low is external structure. Okay? Anything inside of this swing high and this swing low is what is known as internal structures. All right? So, in other words, your internal structures are your retracement phase in the market. And we want to capitalize on that retracement phase to take price lower, even though we are overall bullish. But we want to capitalize on the retracement phase to take price to an area of interest, a valid area of interest. As you can see, swing high, swing low. This is your trading range. All of this area is your trading range. So price is free to travel back all the way down to this point, to this low. All right? But must not take out this low and close below it. If that happens, then this uptrend will be over. All right? I want you to understand that. But if it wicks below this low, then this uptrend is still intact until it closes below this low. Now, so we want to capitalize on these internal structures. Now, when we have marked our high, our major high and low, I've told you, within your trading range, you have only two areas of interest at work. You have the decisional area of interest, which is 50-50, low probability. And then you have your extreme area of interest, which most of the time is within your premium or discount zones, depending on the direction of the market. And so we mark out this our extreme area of interest. Okay, so this is our area of interest. This is our trading range. So price is free to travel all back down to this area of interest. If it gives us bullish reaction, then we can go long from there. But for now, we want to capitalize on these internal structures. Simple. Having said that, let's get to the live chart and let me show you some things there. Now take a look at this. Like I told you, before you do anything on your chart, understand the bias of the market, the direction of the market, and that will be your market structure. Market structure number one is king. So this is your high. Why is this your high? Well, it is your high because it has already taken out inducement, and this is inducement to confirm this high, and price printed this low. For this low to be confirmed, it has to sponsor the move up to take out this major structure high and close above it. And as you can see, that happened here, and this is break of structure. So this low is confirmed. And now we have a higher high. All right? For this higher high to be confirmed, inducement is needed. This is your inducement taken out to confirm this high. So now you have swing high, swing low. So this is your trading range. All right? Remember, your swing high is external structure, swing low, external structure. Anything inside, in between this high and low, they are known as internal structures. All right? So it is these internal structures we want to capitalize on. But you cannot sit on your hand and wait for price to rotate all the way back down to this area of interest before you can take price higher. I mark this as a valid area of interest, our extreme area of interest, because this is not a good zone for you to mark as an area of interest. Some of you will mark this candle as your OB. No, this will serve as liquidity. If there was no valid area of interest below here, if it was only this one, then you can mark it as your area of interest. But for now, we have another valid area of interest below. And therefore, this low will serve as liquidity for this zone. You need liquidity in front of your zone for that zone to be high probability. All right? So now we are going to take advantage of the price action within this box. All right? First of all, we will do this massive downtrend, these candles, these bearish candles coming down, as you can see. If you look at these candles now carefully, you will see that there is no opportunity for us to enter the market here. Price is just dropping. All right? So we are going to look at the opportunities on the lower time frame, taking advantage of the internal structures to see whether we can have opportunities to enter the market here, going down to this point. All right? We'll first do this one, and then later we do this one. This, look at massive bullish candle going up. So we'll also do that. Okay? So we want to get to the 5M. I'm using 1H here as my higher time frame, meaning that the 5M will be my entry time frame. So we want to see what the 5M looks like. Now, take a look at this 5M. This is the box that we drew on the 1H, which is the box we want to see whether we can have opportunities to go to enter the market multiple times using internal structures. All right, and this is the 1H inducement. All right, I showed to you 1H inducement. All right, now, but take a look at what is happening here. We have identified the 1H inducement, but your 5M also needs inducement to confirm a high or low. All right, so where is the inducement on the 5M here? All right, this is the high of the 1H, but 5M also have a high. Where is the high? High will be confirmed when inducement is taken. And so where is the inducement on the 5M? Well, the inducement on the 5M will be this one here, guys. Remember, the inducement of the 1H is still here. Okay? Now, we have identified our high on the 5M. But where is the higher low before this higher high on the 5M? Take a look at this. This is a high. Why? Price took out this inducement. After taking out this inducement, this high is confirmed. Now, this low cannot be confirmed until price goes back up to take out this major structure high and close above it. And as you can see, that happened. So this is your higher low before this higher high. So incidentally, your 5M higher low, which is your chalk, and your 5M chalk coincides with the 1H inducement. So this is 5 minutes chalk, but 1H inducement. Now we have to wait for this chalk to be taken out on the 5M before we start thinking about taking any trades in the market. And as you can see, chalk was taken out here. And now I want to play price from here. Let's use the replay tool to make it easier for us to understand what we're doing in the market. All right? So for this low to be confirmed, we need inducement. All right? And so where is the inducement? This is how you trade your internal structures. Please take note. Your inducement is here. And I told you in the last video that the first area of interest you should focus your attention on is your order flow. Your order block is not as important as your order flow. Order block is just a refined version of your order flow. And where is the order flow here? After inducement is taken, this is your order flow. From that low to this high is your order flow. So if price taps into this zone, then we'll go short from there. All right? So we place our trade here. So let's continue to advance price. Okay. So as you can see, price has tapped into our area of interest. All right? And it's going down. But how do you manage this trade? Remember, this is a counter trend trade. This is internal structures you are trading. This is retracement phase. Our actual structure of the market is bullish. We are bullish overall. We only want to take advantage of these internal structures to see whether we can make some good money for ourselves. But you must know how to manage your trade when it comes to internal structures, because price can just turn back at any time. No one knows. Can turn back at any time and take you out of the market. So I will advise you strongly that in this kind of situation, enter 2 positions here. All right? Once price takes out this low and closes below this very low, all right, move your stop loss to break even on one of your positions. Using one of your positions, take your stop loss to break even. Leave the other position to still stay where it was, and let that one run. Okay? It is this second position, this second one, that you'll be using to trail your stops. There is something called stops trailing. You are trailing your stops. As you are trailing your stops, you are locking in profits. Once price takes out any low, in the case of this bearish structure, you take profit. You lock in profit. You move your stop loss to that area. Okay? So let's continue to play price. So we're in that trade now. Let's see. Okay. So we have a low here. For this low to be confirmed, inducement is needed. And where is the inducement in the market here? This one is your inducement for this low to be confirmed. All right? So we continue to play price. If price takes out this inducement, all right, and gives us TNCP, we can go short from there. But if it closes above, where is our area of interest? Well, our area of interest would have been this candle here, this candle. But if we mark that, that is your valid OB. But if we mark that, it's already mitigated by this next candle. So we don't need to use that. What we need to do is to transfer that OB to this next candle. So this will become your valid OB in the market. All right? Your high will still remain where the original OB is. So if price comes into this, our OB will be into the trade again, will be activated into the trade again the second time. So let's continue. Now take a look. There is a new low here. This low is lower than every other low. And for this low to be confirmed, inducement is needed. And inducement can be transferred from there to this point. That's your new inducement in the market. Simple. So as you can see, inducement has been taken out and price has closed above. That means that you need to look for your area of interest here. And where is the area of interest here? Look at it. This is your valid order flow. This one. That's your order flow. And as you can see, price came into that order flow after taking out inducement. It has tapped into the order flow. So we have been activated again the second time into the market. Let's play price a little more. Okay, so this OB is no more valid here. So we take it out. All right. So we are in our second trade now. But remember, this one again, you can enter 2 positions. All right. Once price closes below this low, move one of your position to break even and leave the other one to run. Simple. That's how to manage this trade. Simple. Remember, this one is still running. This one too is now starting to run. So let's continue. We have another new low in the market now. Here is our inducement in the market to confirm this low. That's our inducement. All right? If price takes it out with TNCP, we go short. All right? Everything is mitigated here. This one has been mitigated. All right? So we continue. Do we have a new low? No. Our low is still, our inducement is still valid where it is. Look at it. We have a new low. We have a new low, this low here. And where is our inducement? Our inducement is here. So we can transfer this inducement from here to this point. If price takes it out and closes above this OB, all right? Or this is our order flow. So we continue. Sorry, We have gone too far, sorry. So our inducement is still valid. All right. So our OB here is still valid. So let's continue to see what happens. Now we have a new low, and our inducement can now be transferred from here. Can be transferred from here to here. Simple. So we wait for it to happen. Take a look. We have a new low. Our inducement can also be transferred again from here to this point. Now, where is our OB here? Take a look at this OB. Look at it. This candle took out the high of the previous candle. So that is actually our OB. This is our OB. But if you mark this candle now, all right, it's already mitigated by this other candle. And we need fair value gap. So what do? We transfer that OB to this one, to this next one, this one, because we need fair value gap. Can you see that? But your high will still remain at the top of that candle that took out the previous candle's high. So this is a valid area of interest in the market. And therefore, once price comes into this and takes us into the market, we'll go short. Remember, we're already in 2 trades. Okay, so we are still there. Now, we have gotten to the end of this box here for this downtrend. All right? So, you can see the massive profit we made here. How many trades? 1, 2, 3. This one did not go. All right? This one is not mitigated. So, we have 1 trade mitigated, 2 trades mitigated, and where is the third one? No, 2 trades mitigated. Let's get back to that one each and let me show that to you what we have done there. 2 trades on that downtrend. Let's get back. Can you see it? Can you see? This is what we have done now. And we have 2 trades here. But here on the 1H, no opportunity to go short. But on the 5M, using the internal structures, we have 2 trades. And those 2 trades give us massive profits. Can you see that? Now, I want us to do the uptrend. Let's get back to that 5M and do this up now. How do you transit to the uptrend now? Now, for this low to be confirmed, this inducement is needed. Remember, we are still bearish here. Let's assume we didn't see what happened on the right-hand side. So now, here, I would have expected that by now, you will trail your stop to this point. So that if price turns back and take you out, you would have made profit from this high, all right, to this low. I would have expected that you would have done that by now. When price closed below this low, you would have moved all your stop losses to this point. All right? Now, so let's assume we didn't see what happened on the right-hand higher. Now, this low, we are still bearish. Now, price has to take out this high, this inducement. And here is our OB. Because our expectation is that when price taps into this OB, we want to go short. Okay. So, price has taken out this inducement. All right? But yet to tap into this, our other block here. Okay. We are in now in the trade. That's the third trade. Let's see whether it will go our way. Okay, so you can see we are already out of the market. I'm not going to sit down here and show you only winning trades. Look at it. We are out of the market. Simple. Price has closed above this very point. So that's -1. Now that price has closed above, it shows that price wants to go deeper into this zone here, our extreme zone here, which is unmitigated. And where is the last lower high before this lower low here? Look at it. This is our last lower high here. This one. Okay? So if price takes it out and closes above, that will become change of character. Simple. This is our lower high, lower low. Price has taken out this decisional OB. This is our extreme OB. All right? So we want to take price to this extreme OB. we want to start going long now because price has closed above this area of interest here. Remember, we have taken -1 here, but 2 trades are running for us in our favor here. And we have taken our partials here. We have locked in all the profits here. All right? We have moved our stop loss all to this point. So we are out of the market and we have made massive gains here. Now we want to go long after price close above this our area of interest. So how do you go long? Now, price has printed a high. For this high to be confirmed, it needs inducement. And where is the inducement in the market here? Here is your inducement. That's your inducement. If price takes it out, all right, and gives us TNCP, we'll be more than happy to take price. We're more than happy to take price higher. To where? To this area of interest. If price goes up to take out this high and closes above, now this bearish structure has changed to bullish. But for now, this bullish opportunity is just to take price to this very area of interest here, so that it can give us bearish reaction and we go short from there. That's our own thinking. All right? So taking out this inducement, where is your area of interest that price can tap into? Now, take a look at these guys. Look, price went up and printed this high. It printed this high. For this high to be confirmed, inducement is needed. And where is the inducement? Inducement is here, guys. This was the inducement here. So price has taken out that inducement. This is the inducement. All right? So price took out that inducement. So this candle here is our area of interest. If price comes down, takes out this inducement here, this is our area of interest here. All right? But if you mark this candle, it's already mitigated. So because it took out this, it swept liquidity here, structure liquidity for that matter. All right? This week will become our area of interest. All right? So if price comes into this area of interest, then we want to go long from there. We want to go long. So let's continue to play price. Now, price has printed a new high. So this our inducement is transferred from here to this point. And then our OB, we also have another OB here. We have an OB here, clear OB. Can you see that? Clear OB. So we have that as our decisional OB, and this is our extreme OB. So let's continue. Okay, so price has tapped into that our OB. So we want to go long from there. So this is another trade we have taken here. All right? Now, look at what is happening here again, guys. You can add up. You can add to your position here. Look at this. What do you call this? This candle that came to activate us into the market took out the low of the previous candle. And this next candle closed above. What do you call that? That's TNCP. We have two ways trading the TNCP. All right? The one I showed you in the last video is one way. This is another way. I'm not going to discuss much about this thing now because there are premium contents. All right? So that's our TNCP. So if price comes back to tap into this area of interest, we'll go long from there. Meaning that if price taps in here and goes long, we'll be in two trades going higher. So we continue. Can you see? We have been activated into the market. Simple. And where is going to be our target? Our target will be this high. This high is our target. Okay? That's our target. You can take partials here. If you enter two positions here, you can close one of the positions here or move your stop loss to break even. Because price has now tapped into this our area of interest here. But we need additional confirmation here before we can take trade lower. Otherwise, we want to go long. We need additional confirmation here. So we continue. So as you can see, we do not have any confirmation yet. You have gotten here. We want to see candle. Look, we want to see chalk. If you understand something about chalk, we need to see change of character here. This is your change of character. If price takes it out, all right, then we don't need any inducement. We just enter the market direct. Once it takes out this chalk, all right, so we continue to advance price. That's the confirmation you need. Otherwise, this uptrend will still maintain it. So as you can see, price didn't take out that chalk. So you can see, all right, what we're talking about. How many trades here? Take a look at it. 1, 2, all right, 2 trades here. And look at the massive profit. Here we also have 1, 2, all right, all together 4 trades plus minus 1. 4 trades minus 1. Can you see that? These are the ways for you to take your internal structures and have multiple trade setups. Whereas if we go back to that one age, you will realize that there is no opportunity at all. Look at it. No opportunity this down, no opportunity this up. Can you see that? But on your lower time frame, you have 4 good trades with massive profits. Think about it, guys. Watch this video over and over again. Take your time to backtest. Don't rush into your live account. Take your time to backtest, and you'll be glad you came across this video. If you gained anything in this video, if you are new to our channel, please subscribe and turn on the notification so that anytime we post a new video, you'll be notified about it. And please give us a like. If you love this video, give us a like. And if you are yet to join our free Telegram channel, please do so, because sometimes we post these high probability trades. All right? I will leave all the links in the description below. And if you want to belong to our premium community, our VIP community, you can do so. Our doors are still open for June diet. You can still take advantage of it and join our VIP community. All right, guys. I see you in our next video.